Before we get started, just please understand that any advice in today's session is of a general nature only and that your personal circumstances have not been taken into consideration. Okay, all right, so let us move on. Let's have a look at what we have on our agenda for this week. The charts are starting to look good. We're starting to get some triggers come onto our charts, and the market is definitely moving for us, which is all good signs for us. And I guess as Forex traders, what we really want is a bit of volatility is actually good, because a flat market is a boring market and one that doesn't provide us as many opportunities. Now, what's on our agenda for this week? Three major events that are happening this week are basically we've got three central banks that are providing key details. The most obvious is the Fed Reserve for the US. Let me find out where it is, where basically they will let us know if they are increasing rates or decreasing rates, and that coupled along with the FOMC statement. Now, we know that they increased rates first time in 8 years last December. Nobody really thinks that they're going to pull the trigger again in January, although it is largely expected, and the forecast for the year of 2016 is that this is possibly a year of a rate cycle year, meaning that we could get another three odd rate increases throughout the year. December a little bit early, and I guess my personal view on it is that I probably think, like all other analysts, that it is a little bit early. But key things that we're going to be looking out for is what they're saying in the statement, and specifically with respect to how the stock market has just recently, taken a very, very big hit in the first couple of weeks of January. So we want to see if they provide us any sentiment towards that, and just the overall nature of what they're looking at. The job numbers, the payroll numbers that came out in December were very, very strong. So the key event is here as whether they hint that it could be coming in the first quarter or not. And now a real bombshell would be if they just say we're increasing again right now, and we should see massive, massive movements if that was to happen, because basically we will all be left pretty much blindsided. Okay, so that's the first central bank. The next one is the Japanese. Okay, so they will provide us with their monetary policy statement. Now, they have already hinted that they want to increase their monetary easing program. Now, in reality, if I had to give you a percentage number of what most analysts feel, that number is around about the 5%. So they feel that there's a small chance that they may do it right now. But you never know with the Japanese and the BOJ. They seem to surprise us every single time. So just make sure that you're aware of that. That happens towards the end of the week, late Thursday night, or let's call it late Friday afternoon. Okay, so the BOJ, just to see what their plans are for their monetary easing program. Now, should they say yes, we're going to increase it, what that will immediately do, it will drive Japanese yen weakness. So all the yen pairs, we should be able to see some movement. So for example, the US yen, we should see that rise sharply, or a euro yen, and so forth. Okay, and finally, the third central bank that is in a lot of activity this week is the New Zealand, the RBNZ, where they are providing us with the official cash rate. Now, no one really thinks that they're going to drop their rates again, considering they just dropped their rates in December. Okay, so we're not really expecting a rate cut. However, just recent data, and just between December and right now, their dairy prices has decreased significantly. Their CPI levels is at 2008 decline levels, which basically means it's the largest CPI since 1998. So all of that puts a lot of pressure, and what we're going to specifically be looking for with the statement, which is over here uh, for the RBNZ, is more specifically as to whether they hint that the next rate is coming. I believe that they will cut again. I don't think it's going to happen this week in January, but what will move the New Zealand dollar is what this statement implies next. Okay, so those are the key events, the three fairly large central banks in terms of the currency pairs that we trade are putting out significant pieces of data that we must be aware of. The euro is a little bit quiet this week. The only real data is the German the climate number. Mr. Draghi will speak, so you never know with Mr. Draghi, but the euro still basically the major thing to keep in mind with the euro is that back in December they implied that perhaps they will introduce more monetary easing in the first quarter, which is scheduled to kick in around about March. So we always listen to see what they say, if we're on track, if we're not on track, if it's going to come quicker, and those are types of things that can move the euro. I think for this week, because of the combination of data, the one that's possibly going to be the most under the hammer is going to be the Kiwi dollar. All right, because we've got the Fed Reserve and we've got the RBNZ speaking. So this is the one that's going to possibly move the most, directly affected by raw data. Okay, so there you have it. That's this week. As always, please take note of these times. These times are in my local time, which is Australian Eastern Standard, or otherwise Sydney Daylight Savings Time. Okay, let's bring on our charts. Let's see what's been happening. We've triggered a couple of trades. And any questions for anybody new in the room, please type that in. Type your questions in as you go along, and I'll make sure that I address them for you. All right. Aussie dollar. Our game plan for the Aussie dollar last week was, after we missed the break-in trade, all right, because of Christmas and all those types of things, or early start, we said we still want to be sellers. We still have, and we essentially from this point on, we feel that we are in a downward trend by our definition. Our two moving averages have crossed over, our 24 and our 12 exponential moving averages have crossed over. So we said, let's wait for a bit of a pullback. We're getting the pullback right now. Let's look for an entry and let's see if we can take the trade then. So we're kind of close. Right now, what I'm looking for is I would like to see an inside candle, maybe a shooting star or an engulfing candle. Now, I've already broken the low there, so this two candle sequence cannot be an inside candle. So a couple of things may happen here where this may continue to go up, and it may go up to there, for example. Let's say it finishes as such, and then what I'll have to do is wait for tomorrow and hope that tomorrow I get a candle inside like that. That'll give me the fractal on that one, and then I'll be able to take the trade on Wednesday morning. Okay, the two candle sequence that I have right now cannot give me the setup that I'm looking for because I've already broken down. So this is not an inside candle. Does everybody understand that? Okay, somebody's asking me what the fib levels are at. I'll have a look for you. Does everybody understand that this cannot be an inside candle? Great. All right, let me have a look. Fib level. I'm sitting on the 38, okay, which is a natural fib level. So this could well go there for us, okay? But I'm not willing to trade it just purely based on a fib level. Okay, remember, Predominantly on Mondays, we are price action pattern traders. I will look at fib levels, and if I'm really wanting to trade, I'll try and find one. But if I don't get the correct price action, I'd rather just walk away from it. So this one there, I will not take it based on that. But yes, Paul, thank you. We are at the 38.2 fib retracement level. So I kind of don't want this to go beyond that, and I'll show you why in a moment. But if it does, then possibly on Wednesday I could have an inside candle type setup. The other setup that I may get with the current candle formation is the following. I may get this candle come down like this, wick there, because that's where it opened, and then come down to about here, at least past halfway of that one, and that three candle combination, I haven't drawn it very well, but if you use your imagination a little bit, this three candle combination, which will give me also the fractal up there, will be very close looking to a shooting star, okay, which would mean I will have the courage to take a short tomorrow. But that means that the current candle can no longer keep going up and must start going down and finish up looking something like what I'm showing here. Okay, does everybody understand what I've just tried to draw there? It's a little bit not very pretty, but do you understand? Yep, we're all good. Okay. All right, so those are the two possibilities I can see on the Aussie dollar. The pullback is fantastic, and this is the area that I actually like it right in between these two moving averages. That area is the sweet spot. So if I get the candle formation that I like there, I never hesitate. I take it. It's a really nice spot for it to occur. Let me have a quick look at a 4-hour chart. See, on a 4-hour chart, we can see that we're hitting some kind of resistance. And I just noticed as well, this is around about the 70 level or 70.30, which is a big round, a decade number. So you see the market, it's come there and it's shot back down. It's come there, it's shot back down. It's come there and it looks like it wants to shoot back down. So the level is a significant hot spot level. You can see it clearer on a 4-hour chart. So can we get a see, if you were trading off a 4-hour chart, we could argue that you've already had a trigger right there. Did anybody take a short of those two candles there? Is anybody short Aussie dollar based off that engulfing candle setup? I just want to see a show of hands. Did anybody see that? It is a 4-hour chart. I don't look at my 4-hour chart as often. So, okay, I've got no one. So no one's in on that. All right, so if somebody wanted to be in on it, basically, if you were entering right now, you're actually entering a little bit better than we're entering there to here. Okay, let's put this to a vote, okay? Um, let's let me just measure a sec. Give me one moment. Who wants to short is the question. Yes or no? Got one yes. Got two no's. Got three no's. Okay, Got more no's. Okay, I got more no's than yes, so I'm not going to take it. All right, so I won't take the trade. Basically, this pattern though, guys, just to let you know, if I saw this pattern just like this, and it was a daily chart, I would be short already. Okay, it's a really nice signal. That's a really nice signal. All right, now the only thing that bothers me is that it's a 4-hour chart. That's the only thing. And this candle right now is looking quite bullish, so we may break straight through. So let's sit it out. Let's leave our game plan as it is. If that does break forward, we'll look for an inside. So this ends up being like that. For example, we're going to look for another candle tomorrow, and then we're going to look for the short on the following day. All right, that's all I have for you on the Aussie dollar. Let's move on. Euro USD. Okay, for those of you on this trade, you would have seen this pop up on your account, or you've taken it on your own. Shorted euro dollar based off these two candle formations right here. Those two there. Inside candle, we broke on the downside, and you can see my green line where I've entered. So I'm in that direction. I nearly got stopped out. See how close I came to getting stopped out? Then the market's moved back down, and we're currently here. I have not reached my 1-to-1 point. I'm still in the trade. It's up about 55 pips on the trade. Okay, so that's the Euro Aussie and the Euro AUD. The trade is still valid, so I can't take any action on the Euro USD. I have to play this out. What we're hoping for is we're hoping to come back down to the other side of the channel. As this moves around, I may have to adjust my target a little bit higher, for example, depending if it comes down like this or what angle it comes down. So I may have to do some adjustment. All right, but just remember as well that if I get to the 1-to-1, which the 1-to-1 is probably there somewhere, I'm just straight out measuring that distance compared to that distance, half the trade will close out. All right, so the Euro USD, we're playing out what we took last week, and we're seeing it through. Who's in this trade? Can I just get a show of hands? Just want to see who's in this with me. Okay, 1, 2, 3. Okay, 5. Simon got stopped out. Did you have your stop at this level here? Oops, can't. You might have had your stop a little bit early. Okay, so quite a few of you are in on this trade. Okay, all right. Okay, so all right, well that's good. I like that. So we're not going to do anything Euro USD this week. We're still in a trade, and we're still going to try and play it out. Now, if before I see you guys next, if this does come down, do what we wanted to do, and we get another setup over here, another inside candle, what are we going to do? What are we going to do? We're going to buy again. That's right. So if we get the other setup, we're going to go for it again. If it breaks down, you don't trade that one. Okay? All right. So if it does come down, like we hope it does, and we get down there, let's go again. All right. So this is the whole idea. When you're in the zone, you're basically almost always in a trade. Yeah, especially when you find a really good pattern that is being what's the word that I'm looking for? A pattern that is playing out correctly. That's the ones that you want to take as many trades as you possibly can. Eventually we're going to get stopped out, but if we take it 4 times correct and we get stopped out once, it was a great pattern for us. Okay, especially since we're trading at significantly better than 1-to-1 ratio. Okay, all right, so Euro USD, we know what the game plan is. Let's move on. Okay, the GBP USD. Finally, it's looking like it's giving us some kind of a retracement. We're getting close to that hot area that I like. We could actually get an inside candle tomorrow, these two. All right, we could get them tomorrow. So if, for example, the two candles finish exactly like it is, tomorrow we could put in a pending sell down there to go in the downward direction. What I would prefer though, I would prefer if this candle, I'll show you what I would prefer. I'll try and draw a little bit better. I would prefer this one to go up a bit more, let's say there. All right, and then the following day to get something like this, and then the following day I'd take a break and I'll get the fractal there. That's what I would like. All right. Sometimes we don't get it to appear the way that we like it. So let's look for it tomorrow. So tomorrow there is a chance that we've got an inside candle with an opportunity to sell. All right. Let me have a quick look at something else. 1 second. No, what I thought was there was not. Okay, so that's our game plan for the GBP USD. Let's wait and see. We could have an inside candle tomorrow. If not, if it pushes up further, we can go more. Okay, someone's just asked me a question. Is this an engulfing candle? Why didn't I take a trade over there? Okay. Why did I not take a trade there? Can everybody see that this is an engulfing candle? Why didn't I take a trade over there? All right, let's have a look at it. Let's see if we can answer our own question. So I'll just zoom out so everybody can see. All right, so I've really zoomed out. That engulfing candle occurred down here. Do I have anything at all that I can say that would have given me a clue that the market may turn around there? Normally when we pattern trade, I might have like a support line that I can say, yes, I think it's going to happen there, or I can have a channel, or it can be something. But this one here is just happening in the middle of nowhere. Okay. So what I'm basically trying to say is engulfing candles and inside candles happen all the time, but it's where they happen that makes it significant. Okay. So that's very important. All right. So for this particular setup right here, this candle that I'm pointing at is engulfing this one that I'm pointing at second. But the problem is there's no support line or there's nothing here to indicate to me that yes, this could be a place where I can take that trade. Okay, and especially when it's a counter trend. When it's a counter trend trade, I'm looking for something to bounce off. So for example, if you have a look at this line that I've drawn here, see, going for things at these level makes much more sense because I've got a strong reference line. This one's just hanging in midair. Okay, so hopefully that makes sense to you guys. Now, can you take it along there? Absolutely, you can take it whenever you like. But what happens if this just kept on going down, more and more and more? And in fact, if you have a look, there's probably, if I look for it over here, over here, there's another one there. But you can see it failed and the market just kept on going down. All right, so it's important to try and pick the trades that are in our favor probability wise, and that's all I'm trying to do. All right, gold. Okay, gold unfortunately didn't give us a clean entry because we said we broke out. Let's look for an entry over here so we can buy it, but we never got a clean entry. I'm noticing right now we're getting very tight there. Inside, inside, inside. I'll probably see that better on a small time frame. I'll just show you. You can start to see it here. It's getting tight. Okay. Or even, let me just zoom out a little bit more. If I don't want to trade that one. On a 1 hour chart, by the way, this is a great pattern. There you go. See, on a 1 hour chart, it's a very nice pattern. All right. Now, there's not enough space in there to take good. So you basically, with this type of pattern, you'd be taking a breakout, or a breakout of the triangle. All right. Now, I don't normally trade 1 hour patterns, so I'm not going to trade this one. So let me go back to my 4 hour pattern. And what I'm going to try and do is give myself a little bit of a better pattern. Let's see if I can make this. Okay, I like this pattern a little bit better as such. The reason I'm trying to draw it straight is because normally when there's a straight, the triangle with a straight top can usually break down to about back down here. So if it breaks down, it can come back down to that level, which gives me the distance that I need for the trade to work. Now I'm in a 4 hour time frame there. All right, so you need to look at it. The bottom line is real strong. We got 1, 2, 3 kind of and a half-ish touches. So the bottom line is really good. It's stronger than the top. So if this comes up here now and comes back down to here, at this level, really start to look for the sell. Okay, we don't trade this one up. If it breaks up, that's okay, just walk away from it. But if it comes up, I need this third touch up here. All right, so if I can get 1, 2, I get a third touch up there. When it comes down, look for the bear candle coming down. It's a high probability trade. Does everybody understand this one? And this is on a 4 hour time frame. All right. So if you don't normally trade gold, well then don't worry about it. Don't look at it. But I'm just saying that this is a high probability type trade. All right. So, and in fact, let me just do one thing. 1 second. No, let's leave it as such. That's the pattern that I'm looking at. Okay. And one of the reasons why inside candles work so well, and I spotted this by, see here, there's 4 inside candles in a row over here. 1 inside, inside, and inside again. It's basically an inside candle means it's a narrowing market. The market is getting narrower and narrower and narrower. Okay, so and when it gets tighter and tighter and tighter, what follows is a breakout or an explosion out, and that's the trade that we're trying to take advantage of. All right, so our plan for gold, it's on a 4 hour chart for those of you who are courageous. Now remember, and I say courageous because with gold, you've got to trade a little bit bigger. It's just a convention with gold. It does every broker in the world. It's by ounces, so it's a slightly larger trade than what you might be accustomed to. All right, so there you have it. Let's carry on. Let's have a look at the US yen. Okay, the US yen. I marked out this hottish zone for us. We shot straight through it. It's interesting that we got to about that level and we shot back up again. Now, we didn't get a trade trigger, and I wasn't, to be honest, I wasn't looking to be a buyer down here. But what I am looking for is I'm looking for a pullback in this direction. Now, unfortunately, this candle has already broken the high of this candle. All right, which basically means that this two candle setup here cannot be an inside candle. All right, because this one has a higher high than this one. All right, so that means what the best we can hope for is maybe this candle ends up being like this, and tomorrow I get a candle like that, and then I can shoot downwards. All right. So US yen was the chart that we said last week. It's really horrible looking. Let's just leave it alone. All of a sudden now we get the good pullback, and it's starting to look like a much more tradable chart. So let's keep an eye on it. I might get an inside candle formation ready on Wednesday morning. Okay, so that's all I have. US yen. Let's move on to the Euro yen. Oh, this was a frustrating trade. We got stopped out of this trade. We traded, from memory, I think it was this engulfing candle setup. We got it late, which means we got a little bit of a better entry. I think our entry was about there. We were trying to go that way, and basically I got stopped out on this little candle there. And in any case, the next candle would have stopped me out a bit better, and it's basically gone back up. So at a level which is higher than where I got stopped out. This is a frustrating thing about trading. I remember got stopped out, I think it was at night, but by the time I woke up, the trade had already returned to my entry level. So it's kind of like, well, you just stopped me out and you've just come back all the way to where I started. You need to make sure that you know how to manage your emotions when that happens. Okay, the way that I do it is I literally log into this account that I'm logged into right now maybe 3 times a week. I mean, I look at the charts every day, but I only log into the account if I need to take a trade. When I don't need to take a trade, I am not logged into that account. And the only reason why that is because I can see my dotted lines, my entry levels, and so forth, and they irritate me and they can upset my psychology. So I prefer not to see them. Do I know that the trades are there? Of course I do, but believe it or not, even though you know, if you can't see it, it still helps you significantly. Okay, so if that helps you, there's a little trick. Either way, Euro yen, we got stopped out. So what do we have now? We're at the bottom of the channel, and I haven't had we didn't get a signal, so I've got nothing. So essentially, what we could do, the next trades that may come along are, in theory, we're in a downtrend from that point. So if this was to come up to here and we get a nice setup to go down again, I'm reluctant to take this type of trade when I'm inside a channel. Alright, because this, and by definition a channel means that these two lines are parallel to each other. If I'm in a legitimate channel, meaning there's 2 touches on the top, 2 touches on the bottom, that is a channel. Basically a channel is usually in either a downward channel or an upward, which basically means you're in the trend. Alright, so I'm always reluctant to take this type of trade that I've drawn over here inside the channel until it gets to the edge. Alright, because if it's a legitimate channel, you'll be surprised at how often it goes all the way to the edge. So if I took it here, I'm going to get stopped out. So I don't like to take the trend-based definition trade when I'm inside a channel. Does everybody understand what I'm basically saying and the reasons? Yep, we're all good? Great. All right. So having said that, I haven't got a trade right now and I'm virtually touched the bottom. So that means I'm just going to wait it out to the other side. All right, and that's why I trade 9 currency pairs, so that while one is setting up, it still gives me opportunities to find something somewhere else. Okay, so let's leave the euro yen alone and let's move on. Kiwi dollar. Okay, who took this trade this morning? I saw it. I got it just a little bit late, and I thought I got it in at a better price, and it's just going totally against me right now. Does everybody understand the trade? Let's have a look at it. First of all, we were tracking this pattern. We broke down nicely. We didn't take the breakout trade for one. I can't remember the reason why, but we didn't take it. And so we said, let's wait for the pullback. Let's see if we get the entry. I got the entry, and I'm short. All right. So let me zoom in now. So we got a couple of people that took it. Well done. For all of those of you who took this trade who are short, pat yourself on the back. Well done. The correct entry is this here. These two candles that I'm highlighting is an inside candle. Kind of two reasons to take this trade. We broke down. Okay, it's pulled back. We're in a downtrend, so we're looking to continue to be sellers into this trade. Now, you can already see my entry levels there on the chart. The correct entry level would be at the break of this candle there, the red one there, which we did break. That went through it. I've just been in meetings this morning, and I missed the actual break. And I came back and I saw it over here and I said, oh, great, I'll get in right there. And then I went to lunch and I came back and I go, oh, wow, we're all the way over here. So even if this continues to go up and stops me out over there, well, that's just bad luck. All right. The setup is a great setup. It's in the correct spot. There is nothing wrong with the trade. So everybody that took the trade, well done. Let's hope we can get something out of it. Okay. If you did not take the trade, you've got an opportunity right now to get in at a significantly better level than down here. All right, so let's see what's my trade doing. Let me have a quick look. So you can see here minus 49 pips on the trade. Okay, from my entry, which was I don't know, about 10:30 this morning or something like that. All right, so there you have it. So with the Kiwi dollar, I'm not going to do anything because I've already triggered, and I think the nicest part is to see that many of you saw it as well and took it. So well done. Let me have a quick look at something else, see if I can find us something different. No, I was just having a quick look for something, but it's all okay. All right, so Kiwi dollar, we'll leave it alone. We're currently in. Let's see where that leaves us. Okay, Euro Aussie. Okay, the Euro Aussie was a real interesting one. Now, for those of you who have your account attached, you would have seen a couple of Euro Aussie trades on your account. There was a setup inside candle on this parallel channel. Okay, the correct entry was there. I took the trade and the trade went instantly 50 pips. Now, you would see this trade a little bit weird on your account because what happened was that the stop was about 330 pips. Okay, because that's the correct trade. All right, and to get the risk levels correct, I had to go in at 0.01 virtually, and then I hit a resistance level. So basically what happened is the trade went about 50 pips. I took the trade out and placed it back in as a pending order. It retraced back, got me in again. So basically I got a free 50 points. And then I had another entry about there for the second half of my risk level. And at one point, everything nearly got stopped out, and then it just basically shot back down. So we actually got a combination of 3 winning trades, but it's really There was 3 trades, but essentially it was the one movement. All right. So if anybody questions that, if you want to question that with me or have a closer look at it, just send me a statement and I'll try to explain it. All right. But that's basically what happened. And sometimes it's part of what I do to manage the risk, to even reduce the risk more than the original desired. So for example, if my intention was to risk $60 on the trade, as I've mentioned, at one point I only had about $30 risk on the table by doing it the way that I did it. Okay, now the Euro Aussie has been moving like 300 points, 300 pips a day. It's been moving quite significantly, so that's why the trade sizes have to be significantly smaller to match the risk level. What we're looking for now is we're coming up to this level again. All right, so if I see another setup, I want to have another go at it. All right, it's really where I want it. Now, if these 2 candles give me the setup, I don't want to take that one. I want to come lower. I get the feeling I don't want to take that one. I want to take it right. I must have another touch and then my price action set up before I'll take a long on this one. Okay, especially the Euro Aussie because it just moves so much. Everybody understand? Yep, thank you. All right, so anybody have any questions? I've pretty much covered everything that I needed to cover. I've covered all the pairs. I'm going to go back and summarize. Type your question in right now and I will address them. Aussie dollar. We're waiting for an inside candle to come back down. We've already broken the downside, so we may not get it with the current setup. It may be Wednesday, Thursday before we can get the opportunity to be sellers. Euro USD, we are already in a trade, so we're just continuing on with that trade. GBP USD, we're finally getting the pullback, and we would like to see a bit of a bigger pullback. If we don't, we do already have an inside candle, so we may get a trade set up for tomorrow. Gold, on a 4-hour chart, there's a bit of a triangle coming. We want to see a third touch on that top line, and then on the way back down, we're looking for a break down. US yen, we've just made a higher high so that we can't get the setup of the current last 2 candles, so probably we need another 2 candles before we get the setup to see if we have the opportunity to sell. Euro yen, we're going to wait for a touch on the other side of the channel. Kiwi dollar, we've already sold into it. We're currently 50 pips behind the 8 ball, and we're hoping that we drop down. Euro Aussie, we're very close to the channel, and we're going to look for a price action entry at the fringe over here. Also on the fundamentals, we got Fed Reserve giving their FOMC statement on the wee hours of Thursday morning. Over here, the Kiwi, the RBNZ, sorry, gives us their rate decision and statement Thursday morning. So it's going to be that's like 1 hour apart from each other. So remember, I said the Kiwi dollar is the volatile one. That 1 hour period, so wake up at 6 a.m. from 6 to about 7:15, it's going to really move around. Okay, and the Japanese, the Bank of Japan monetary statement on Friday. Okay, any questions from anything that I've mentioned today? Any questions off topic? I've got a couple of minutes, more than happy to answer those for you. No, we're all good? All right, well then we will call it a day. I'll see you all on Thursday at the usual time, 3:30. We'll have a look at another strategy. And for those of you who are practicing your London Open strategy and you have questions, please send your screenshots and then I'm more than happy to answer them for you. And have a great week. I'll see you all on Thursday. Bye for now.